Hello and welcome back to the Note. We've had an exciting first week of the US earnings season. Broadly, as expected, those companies that managed to surprise were amply rewarded, most noticeably GE today. Those that had an unpleasant surprise were strongly punished. See Walmart from earlier the week. Broadly, revenues are down and worse than expectation, but thanks to profit margins, a number of companies are ahead of earnings expectations, and you are seeing share prices continue to rise. In fact, if you take a look at this chart, you'll see that the S&P is now beginning to challenge the prognosis that was made a couple of months ago when it formed a death cross. That's when the daily price drops below the 50-day moving average, a measure of the short-term trend, which in turn drops below the 200-day moving average, which is a measure of the longer term. Now, not all of that is still in place because the main index is now back above its 50-day moving average. What is driving it upwards? Primarily, of course, it's changing sentiment on rates. If the Fed does indeed keep rates lower for longer, that will help stock valuations. However, that has to be balanced against the fact that if the Fed does stay lower for longer, that will be because the economy is in bad shape. That brings us to a second trend that is worth looking at. If we take a look at this next chart, you can see that stocks certainly seem to have been supported very much during the era since the crisis by QE, by the steady growth of the Fed's balance sheet. It's once that accumulation of assets on the balance sheet stopped that the stock market got into trouble. One thing that is now beginning to be discussed in Wall Street, I don't know whether it's being discussed in the Fed, is that maybe there may yet be cause for a QE4 or some other form of stimulus, extra stimulus beyond what has been administered already. If you see something like that, maybe that does drive the stock market further, or at least the hope of it does. As it stands, that's the very interestingly poised position we have at the moment. Stocks appear to be trying to reverse what appeared to be a very dangerous situation where they were slipping into a bear market. For the next week, we have lots of new earnings results to look forward to, and we also have lots of announcements from central banks around the world. We can expect this rather exciting period in markets to continue for a while yet.